Hey everyone, welcome to the Cedar Room podcast where we talk about life, family, a lot of business, and a little bit about everything else. I'm Dan Vanderkoy, husband to my stunning wife Erin, dad to our 3 wild kiddos, and owner of Mana Insurance Group. From running around playing games as a youth pastor to running an insurance company, I've experienced and learned a lot. We hope this is a place for you to come think, process, and challenge yourself to grow. Make sure you hit that subscribe button to stay connected as we talk through these ideas together. Well, I'm excited to be here today with Leah Calvin. Leah is our long-term care and benefits specialist in our office. And today we're going to talk a little bit about something that's kind of affected both of our lives in long-term care. And a lot of people don't like to think about it, don't like to talk about it, out of sight, out of mind. I'll deal with it down the road. But reality actually says it's probably more important to deal with it now. So, Leah, why don't you just share a little bit about yourself and your background and how you came eventually over to Mana, but even your background just in the medical field a little bit.
Yeah, so I actually came over to Mana because of the long-term care policy that we are able to offer clients. And one of the reasons I made that decision, the biggest reason I made that decision is I worked 10 years in the medical field, and 3 of those years were centered around geriatric patients. And just working with a lot of families and patients who did not have things set up or who did have things set up but not in a beneficial way, I had a lot of interest in seeing what that long-term care policy could offer people in those situations. And so after reading the policy, I accepted Dan's offer to come on over to Mana, and I've spent almost 2 years working directly with those looking for a solution and making sure that we find the best fit and options for them.
Yeah, and Leah's been instrumental. Last year we were awarded we were ranked 17th in the country with Nationwide Financial on their Dean's List, and Leah was a big part of us being able to do that as a team. And so thanks for being here today.
Yeah.
We usually try in a lot of these podcasts, we try to talk about culture and leadership and things like that, and not focus actually in on insurance and products a lot. But this is an important subject, and it's something that I think has affected both of our families in different ways, and wanted to talk a little bit about kind of my story. And actually, when I first heard about Nationwide's product in this, it was really interesting because I had gone through some stuff within my own family of different long-term care needs with my grandma and grandpa. And we didn't have anything in place. And what the story was is my grandpa always says, my grandpa was one of my best friends. He was my mentor. And he said, he goes, we got this property, down the road, if we ever need it, we'll sell it. And that'll pay for, what we need. Well, what happens is with that is you get the market, right? It changes, the real estate market changes. And so long story short, my grandma came down with dementia, and she was in a facility for 2 years or so, and at 8, 9, 10 grand a month going out the back door for those facilities nowadays, it ate up a lot of their assets and their cash, and so it kind of led into that place where all of a sudden grandpa's like, well, if I got to keep paying for this and grandma's actually healthy, her just mind's not there, then all of a sudden we're in this boat where, okay, we got to start selling this property. Well, the market had started to go down a little bit. And, I know your neighbors are all good people typically, and they care about you and stuff, but they also are smart business people. And if they know you got to sell your property right away and they got the cash for it, do you really think they're going to give you top dollar, right? And that's kind of what happened in some of ours. We saw us having to sell property a little bit below market value to be able to pay for that. And even that started to eat up what it was costing to take care of grandma. And so we had that, but for so long too, we didn't get a ton of help in. Now my mom and my aunt and family members would help, and I would help, and my sister would help, my cousin, but a lot of times there's just stuff that would fall into my grandpa. And so what's crazy is my grandma died on February 1st, and my grandpa ended up passing away 45 days later. And throw on top of that, my wife's grandpa also died 10 days after my grandma died. So we lost 3 grandparents in 45 days. And But what I think looking back on that now that I see is that the actual care that my grandpa was giving to my grandma on a daily basis, if she would fall out of bed, if she needed help getting to a doctor's appointment, if she needed help getting clothed or going to the bathroom, at the time, I mean, he was 80, right? That's wearing on his body, even though my grandma was a very short, tiny, we always joked that she was a midget, but it was one of those things where it actually, I think it really wore my grandpa down. And so by the end of it, he was just like, and now we kind of look into a whole, new realm of life. Well, and even with that, my grandparents on my other side, my grandma passed away from cancer, and just the care and the people that would help with that. And even my grandpa living in home and having in-home care and stuff like that towards the end of his life, that plays into it. And so it's interesting when I learned about this product from Nationwide called Care Matters, and now they just came out with Care Matters 2. It really piqued my interest because I've walked through this. I've seen bank accounts dwindle because of the cost of a care facility and bringing people in, and it is not cheap. And now we're even walking through that. My dad has Parkinson's, and he's still with us, praise the Lord. But you walk through that, and you kind of look at what point are you going to need to get help. And what's happened traditionally is you buy this plan, and you either use it or you lose it, right? And that's what's really cool about this one. But even Leah, I would love for you to talk a little bit about maybe what you've seen from working with geriatric patients and working with elderly people from that side of it, but then maybe even a little bit talk about the effect that you've seen that it plays not just on them and their spouse, but maybe on the kids, the grandkids, and the whole family, and how that dynamic plays into it.
Yeah, well, I think you hit the nail on the head. One of my biggest frustrations with traditional long-term care, which is what we've only known up until probably the last 5 years, is that it was that case. You paid in a lot of money over the course of many years, and you either use it or it's gone.
Yeah.
And then the other part that I would see is there were a lot of policies that when it came time for need, they were not a cash indemnity plan, which meant they were a reimbursement plan, which meant, once again, the policy was going to determine whether or not it was really in need. So that the carrier got to make that decision, and not the client.
Cash indemnity, just so people know what that means, is basically there's cash paid directly to you every month. It goes directly into your bank account, right?
Right. And that's not what was happening up until a few years ago.
Yeah.
And so that was what I saw a lot of working with geriatric patients, was having to send in bills to prove and doctor's notes to prove that this was a need for the patient. And truthfully, these people had been paying in their money. It had been an investment for them, and they were not getting that payback on the investment. So that was really my only knowledge of long-term care until Care Matters came into the picture. And I think too, the stress on the family, we lost two parents this last year. One that, and both of those parents were relatively young. One was 63 and the other one was 71. So when we think in the grand scheme, that's not very old.
No.
And we saw two widows, and one who was well provided for because everything was set up, and one who was not. And so that burden becomes what happens when. Unfortunately, with my mom, her health is not good either. And so kind of like in your grandparents' situation where you spent all of that time taking care of the one that had the greater need, I worry about what's going to happen with her now, because we waited to a point that now she unfortunately will not qualify for long-term care.
Yeah.
And I think that's the part that we forget. So at approaching 40, my husband and I have had that conversation about we need to do it now.
Yeah.
And the great thing about Care Matters, this policy that we deal directly with, is that you're eligible now at the age of 30.
Yeah.
And at 34, our family was faced with cancer. Well, if we had had a long-term care policy in place at age 30, that would not have affected our family the way that it did 4 years later, because that plan would have been in place for exactly those needs. And I think that's probably the big myth that we see. And we just think we'll talk about it later, and it doesn't happen to young people. And the reality is long-term care is available for people who are at the age of 30 all the way to age 72. And the reason is because there is so much in life we can't plan. So the sooner we plan for the things that we know are to come, the better prepared we'll be. And so at age 30, the premiums are affordable and the pay options are affordable. And once again, you might get to age 55 and have that crisis that we all think comes at age 70 or 80.
Yep.
And so I don't think it's so much our grandparents or even our parents anymore that this only affects. It affects all of us. And we do see those changes in our own insurance and in Medicare. And this is just one way to make sure that burden of care is not going to fall on your kids.
Yeah. And I think too, like when you talk about that and you talk about planning, I mean, the fact my wife and I actually just got done enrolling it because when they made the change to Care Matters 2, it dropped the enrollment rate from age 40 down to 30.
Right.
And so we were able to get enrolled on it. And so what we did is typically when a lot of products come out, you basically pay for the rest of your life.
Yep.
Right. And then you become the chief bookkeeper, the nurse, the everything, and you're kind of taking care of it. And then you're turning in stuff and you're hoping they're going to reimburse all of it. And if it's not approved ahead of time, they might not reimburse it or they might give you part of it. I sat with a client the other day. She works in the long-term care industry, been working with her mom on stuff for care needs that she's had this policy for years and years and years. And she's been waiting over 6 months for reimbursements.
Yep.
6 months. And she says, and I don't even know what they're going to approve or what they're not. So we don't even know if we're going to get this, $9,000-$10,000 back.
Right. And now imagine being single.
Right.
And hoping that when it's you and you're the only one left to take care of yourself, that money's coming back.
Yeah. Yeah. And so it's really interesting. So if you can start to plan ahead, and this is what it's funny. I have a really good friend who is actually a Dave Ramsey instructor for the financial peace course that he teaches. And we're actually in the process. He's actually just got his insurance license and he's going to be doing some stuff for us over in Spokane. And I'm really excited to have him come on. But this was, again, one of the products he was excited about, right? And Dave Ramsey always says, on your 60th birthday, buy yourself a birthday present. Get yourself a long-term care policy. I think he's right.
Well, we're doing it at 40.
But so. I think historically that's what you would do.
Right.
Right? Because why would you start paying for something that you're going to have to pay for, from age 30 all the way to 80 or 90, right? Well, now, like what Erin and I signed up for, I'm 36. I won't say her age. But she did rob the cradle. We will pay till age 65 on a monthly basis, and then we're done.
Yep.
And so what I love about it is historically when they first came out, you would have to pay over 5 years, 10 years, or roll in a lump sum. And you can still do those options.
Right.
They're just more expensive. I can't afford to roll a lump sum in or pay over 5 years because it's going to be a big amount of money.
Yes.
But I can afford to do it monthly till I'm 65. And then what's great about it is I go into a fixed income when I'm retired and I have this benefit sitting there. I have a cash. I might have $200,000, $300,000, $400,000 worth of long-term care benefit that has tripled or quadrupled what I put into it. And then all of a sudden it allows me to know that that's there if I have a care need. And even on top of that, what's even better is if I run out of cash, that cash is available. It's a liquid asset, right?
Yes.
And so at that point, there's no penalty to pull that money back out. And so that's what's really cool. And so you talk like the flexibility in it. I mean,
right.
You've seen it and you've seen the things. I mean, the flexibility that it allows, is kind of a key player in it, right?
Oh, I agree. Yes. And I think too, nobody likes people making decisions for you. Independence is a huge thing for anybody, but especially when you start rolling into your 70s, 80s years old, and none of us like to think about that control being taken away. And so the flexibility of this plan that allows us to set our own need and benefit. And also, you can set that need. And if you don't use it all in a month, it's just money back in the bank. Where with other plans, traditional plans, that's not the case. You're not going to be putting money back in the bank. It's all invested in that policy. And I do think that the flexibility as far as payment too is great. We've got the HSA option too, which is new. A lot of people get to retirement and they've saved in their HSA for a really long time, and they hit, that age 60, 61, they're thinking about retirement, and they go, well, what are we going to do with all this money that's in here? And that's an option now, and that's great. So there's just, what I love about it is when we talk about traditionally how insurance in general has worked on a health factor, there was a box and you had to fit in that box. And now we don't have a box, right? Everybody's needs are different. Everybody's circumstances are different. And this policy specifically allows everybody to have it tailored to exactly what they need. It also gives them the control of what they're investing in. They are not losing anything. There's a death benefit with it, which, that's the other part of my job is life insurance. And I have a lot of people that come to me now and they're aging into 60, 61 and they're looking at a term life again because they're thinking, well, what if something happens to me? I want my family to be able to take care of those bills. And we need to kind of change our mindset in that. And we need to say, what if something happens to me and I'm still on this earth? How are we going to pay those bills? And that's where long-term care is the solution. And it's a solution in my mind for people from age 30 on up. The earlier you can think about it, the more affordable it is.
And I think even too with that, like you said, that you're not only getting the care coverage, we haven't even talked about the death benefit coverage.
Correct.
And so what's cool about it is typically on the traditional plans, and even a lot of the plans still out there today, is you're going to get reimbursed for your care expenses, but you may have poured in $50,000 over all these years and you never use it. That money's gone.
It's gone.
It's like renting versus buying, right?
Right.
And but with this, if you don't use those funds, it goes down in a death benefit. Typically, the death benefit is greater than the amount that you've paid in. It definitely is never lower than it.
No.
But then it goes down to your beneficiaries, and so it's a great opportunity to be able to protect yourself in the short term, but also have that death benefit coverage for final expenses and clean up any debts that you might have. So that's just it's a huge
added benefit,
right? And even the flexibility too. A lot of these reimbursement style plans will tell you, hey, you have to use this care facility or this type of doctor or this network or different things like that. The Nationwide Care Matters product, you can hire in-home health care, you can have assisted living, you can use adult daycare where you drop that person off for a little bit. You can have your
groceries delivered, whatever
you can do whatever. You can hire someone to mow your lawn. All of that. And so all of a sudden it creates flexibility. The other really cool thing about it too is someone's like, well, if I got some family that's helping with stuff, and let's say I'm gonna get a $5,000 or $6,000 benefit a month from this or more, whatever it might be, you actually don't have to take that full amount on a monthly basis too. And you can take a portion of it, and then that extends out the timeline of this however many years you asked for. The other thing is, or you can just take it, it's cash, it's in your bank account, right? But you can start it and you can stop it too. So if you have a need where you're out of commission because you had a major surgery or something like that, and you really need care for 6 months, well, they're going to cover you after your waiting period, and they're going to be able to cover you for that time. And then after that, you can say, you know what, I'm on my own again, I'm good.
You feel like you're good and you don't need it, you can turn it off. And that is great. And going back to what you talked about with the family member too, a lot of times what I used to see when I was working with the geriatric patients is the guilt. They would always feel guilty asking someone to take them to their doctor's appointment. So they would hire transportation, or they would feel guilty having people come and help them because they couldn't afford to give back. And the great part about this policy is, also traditionally, if you need a nurse, so my in-laws, we took care of my husband's grandmother for 8 years. And the last year and a half of her life, I too was ill and I could not help with her care anymore. And it was expensive. They had to have a nurse come in and do the little things that I was doing because I just couldn't do them anymore. And that nurse has to go through a ton of training, which is wonderful, but it's expensive because of that. Where in this policy, if you have someone that is helping you at home and they are able to do the things you need them to do, you can choose that, hey, you can reimburse them at the rate that you want to. It's your family member. You can give a little bit back. They're not going to tell you no. In a traditional situation, it would have to be someone who's approved and certified. Yeah. So it gives flexibility in that too, again, with that independence and just keeping things the way you want it.
Yeah. And I think too, the other thing a lot of people say is, well, I got all this money in my retirement, or I got my money in my 401k, or I just got a lot of money sitting there in the bank. Well, that's great, but you probably haven't got all that money by making, dumb decisions, right? You probably made it by being financially smart, right? And we had a situation where there was some money set aside with a client, and they said, well, we're going to use this. So, well, what if I could take a third of that, and I got coverage for both of you that equaled that same amount? I'm like, what? So yeah, I can take a third of that, and I'll roll it in, and I'll get a policy for each of you, and you'll each have that amount that you had just with the one of you.
Yep.
And they were just dumb, like, you can't do that. I was like, yeah, actually, that's what it does. And the other thing, your premium is not going to change once you've paid it. Especially if you roll a lump sum, it's paid. It's done. It's done. It's a guaranteed premium. And I know, like, back in the 90s, I think it was Genworth or somebody had a thing where eventually they started having all these claims, and they had to start upping the premiums. They had to go to the insurance commissioner, and they go to other people,
ups and ups and ups, yeah.
Yep. And so this is a guaranteed premium. Yep. Whether you pay the monthly one or whatever, it's locked in.
Yep.
And so that's just a huge benefit. So I think the big thing for me, again, and this is where I encourage people in my age bracket, in your 30s and stuff like that, is really start to think about it, because I'm getting to the point where now I'm being more involved in my parents' lives, right? They raised me. They took care of me. I had awesome parents. They loved me. They took care of me. Great values and ethics, and and I'm so grateful for that. And what's really interesting now is having 3 kids, but now helping out with just different things, and it's awesome. And I'm really fortunate because I live next door to them.
Yeah.
And it's been a really good thing. Everyone's like, your parents next door. Actually, we bought my grandparents' old place, and we get to live next door to them. And it's been awesome. My kids can run next door to Grandma and Grandpa's house. My little guy always tries to go get jelly beans. I'm like, you got to go over there and just give Grandma a hug sometimes and not ask for something. But it has been great because we've been able to help out. But as we get into that, sometimes mom and dad will, and I'm not saying my mom and dad, but a lot of times parents have been so independent for so long, and they've always taken care of you.
Yeah.
They can be hesitant to want to have that conversation or ask you for help. And what I've found is that it's important for us as kids who care about our parents as they age. It's important for us to be engaged with them. And we don't need to know all about their finances and all that kind of stuff, but it is important to have the conversations.
Yep.
If you get sick, what do you want to happen? If something happens to you, who do I go to, right? And it's funny, we hand out this little booklet that we get that has just everything from like an attorney or a lawyer to accountant to doctor to, it has the insurance agent, all these things. So that way people know where to find something if they pass away.
Yeah.
And, but those are the things that it's important to start having those conversations. And think about it. I'm sure that your mom and dad would never want to be a burden to you or your family. And I start to think about that with my 3 kids. And they're young yet. They're almost 11, almost 8, and 5. But I think to myself, man, if I could have something taken care of now, that when I retire, it's already paid for. But in the meantime, if something does come up in that time, I'm covered.
Yep.
Like that's making sure I'm not a burden to my wife, making sure I'm not a burden to my kids down the road when they have their families and things like that. And by being able to game plan for that, I've just seen the value of maybe not having that a generation ago, and having some plans in place that were good, and this product wasn't there then either. And so you have to take that into consideration. But to now where I've seen my folks plan and things like that, it's a major benefit, and it's a game changer for the amount of stress that would have to be applied in our family situation, right? So, yeah.
And I think too, the I wish I would have. I think I learned my lesson young. Unfortunately, at 34, I did not have life insurance. So being diagnosed with cancer was a whoops.
Yeah.
And I don't want another whoops in our life. And so that's what I would encourage people is, and often we don't do the things we need to do, and we do the things that we probably could wait on.
Yeah.
And this is not one of those things. And this policy is it's an incredible policy, and it's available right now.
Yeah.
And I don't even want to think 20 years from now. No, none of us can predict the future. We can't predict our needs. We can't predict anything. And just as well in the insurance industry.
Yeah.
This is available now. So if you're within that qualifying age, now is the time to take advantage of that. And that's where my husband and I were this year, and just said, this isn't one of those things. I wouldn't say it's the most convenient time in our life to think about a financial investment. We've got kids in private school, and, as they age, they get more expensive.
Yeah.
But this is something that we can't have another whoops.
Yeah.
So we just can't wait.
Yeah. So yeah, like you said, this is available now. I think one of the things I love about our office too, and I'll toot our own horn a little bit, is just the actual hands-on approach of sitting down and saying, all right, every scenario is different. What do you need? And whether that comes from sitting down with you or myself or someone else in our office, I think we do a really good job at that. And so if you guys are interested in anything like this, check out our website, mannainsuranceGroup.com. Find us on social media, anything like that, and give Leah or I, shoot us an email or give us a call, and we'd love to chat with you about it. We also have different seminars coming up. So we have a seminar coming up in the Whatcom County area in October, and we might try to do one more in December this year yet too. And typically it's really not high pressure or anything. It's about an hour long. We'll have some refreshments and stuff, and we just kind of educate. And I always actually encourage people, now that it's 30 to your mid 70s, I encourage people to my age, bring your parents with you.
Yep.
Right? Come together, and it starts the conversation. And on the drive home, you guys can talk about that, because that's not something that a lot of people make time to do, but it's important.
Right.
And if you actually are focused on it, and it's not like you have to bring it up every night at the dinner table or different things like that, but if you can set aside some time and come up with some sort of game plan, that'd be great. And in the past, we've called these seminars Game Planning Your Future. But we'd love to have you come out to that. Leah, thanks for being here today and
thank you for having
taking
me.
time. And we'll see everybody on our next podcast. Make sure, if you enjoyed this, make sure to like it, give us a good review, and make sure you share with your friends. Thanks, everybody. Podcast, thankfully, is brought to us by Nationwide Insurance. The agents at Manna Insurance Group know a lot about auto, business, farm, home, life, and retirement. Call Manna today at 360-922-0149. Nationwide is on your side. Nationwide Mutual Insurance Company and Affiliates, Columbus, Ohio, subject to underwriting guidelines, review, and approval.